Hello investors, welcome to the channel. For today's video, I'm going to show you the next quantum stock I will be adding to my portfolio in order for me to continue to grow my portfolio consistently using options. Now, if you're new to options or you're trying to use options in order to get additional income to supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you the quantum stocks that I have in my portfolio. I'm going to walk you through why I added them to my portfolio, in addition to the next quantum stock I will be adding to my portfolio. I will show you how I use all these quantum stocks in order to grow my portfolio consistently. Now, these are quantum stocks. Quantum stocks are extremely volatile. So please do your own due diligence before entering the trade. In addition to that, always make sure you have an exit strategy before entering into any option trade. So you guys know how we do it. Let's go ahead and get down and dirty with options. So the first stock in my portfolio is going to be QBT. Okay, so here we are on quantum computing, ticker QUBT, and let's go ahead. I'm going to show you how I'm using this to make consistent income. Now, we're going to go ahead to trade QBT options to the bottom. Now, I will go ahead and tell you each strategy I use in order to get these stocks into my portfolio. Now, with QBT, because this stock is extremely volatile, I decided to buy this stock outright. Later on, we're going to jump into my spreadsheet and I'm going to show you the cost I picked them up in order for me to continue making income. So I do have 200 shares and I'm going to show you how I use QBT in order to grow my portfolio. So we're going to go over to sell, we're going to go over to call, and we're going to choose our strike date. We're going to be going with January 31st. Now, the reason why we're going to be going with January 31st is because January 24th, there's only 1 day left to expiration. It's way too close for comfort. Hence, January 31st. What I would do with QBT and the other quantum stocks is do what we call weekly option trading. So I usually do bi-weeklies. With options, you could either do weeklies, bi-weeklies, monthly, quarterly, it all depends on you. But because these stocks are so volatile, I have decided to do only weekly expiration options with them. So now we're going to go ahead and we're going to choose our strike price above the current share price. Because I do own 200 shares, I could do covered calls on these options. So I will be going with the $13 strike price. Now, the reason I'm going with the $13 strike price is because it gives me a chance of profitability of 80% or higher. Whenever I'm doing covered calls, I like to choose a chance of 80% or higher. So with the 80% or higher, I'm going to be paid $45. Now, I do have two contracts. So I'm going to go ahead and select two. So with the two contracts, you could see my income is going to be 89.82, or let's round it off to $90. So in 1 week, I stand to gain $90. Now, I did buy the stock outright. I paid for it. My average cost is around $1,000. However, if I were to pick this up right now at $1,112 and I received $45, which is 0.45, multiplied by 100 shares because each option contract consists of 100 shares, then I will be making an extremely good gain. So the gain on this contract is going to be 4%. Now, I keep insisting, I keep telling you guys, do not worry about the nominal value. Always look at your percentage return. The percentage return on this is going to be 4%. 4% weekly is an extremely high income return. For comparison, the S&P 500 usually goes up about 10% for the entire year. You're getting 4% on just weekly options. And that is why I decided to add some quantum stocks to my portfolio. QBT I've had for a while, as I showcased in previous videos, and this is how I'm trading it. I bought it outright and I'm decided to do covered calls on a weekly basis in order to get around 3 to 4%. Now we're going to go ahead and go to the second quantum stock in my portfolio, and that's going to be Rigetti Computing, ticker RGTI. Okay, so here we are on Rigetti Computing, And I did make a video about 2 weeks ago where I showed you I actually sold this when the share price dropped drastically. And I had a loss about 2000, I believe. You could feel free to go back and watch that video. I will try to add it to the description below or to the top of this video. Now, with these quantum stocks, like I said before, they're extremely volatile. So make sure you always have a stop loss. My stop loss was hit, so I got out of the trade. Now, with the Rigetti as well, because this is extremely volatile, I decided to buy the stock outright. And I decided to do the same exact strategy, which is a covered call option strategy. Now, I have been telling you guys that this stuff is extremely volatile. I'm going to show you exactly what the volatility that I'm talking about. So once again, we're going to go to sell, we're going to go to call, and then we're going to choose the exact same strike date of January 31st. Now we're going to go ahead and we're going to choose our strike price. And once again, we're going to look for the strike price above the current share price. I will be going with the 16.5 strike price, and that's going to give me a chance of profitability of 83.66%. Once again, this meets my criteria of being above 80%. Now, with the 16.5 strike price and a chance of profitability of 83.66%, I will be receiving $50. Once again, I do have 2 contracts of Rigetti, so we're going to go ahead and we're going to hit 2. So I do have 200 shares of Rigetti, so I'm able to trade 2 contracts. So with the 2 contracts, I will stand to get a regular premium of around $100, once again on a weekly basis. Now, if you were to divide $50 by the share price of 1346, you're going to be getting a return of around 3%. Once again, that is a very decent return on a weekly basis. And that is why I choose quantum stocks. Now, I did mention about the volatility, and this is how you know the volatility of the stock. We're going to go ahead right now. We're going to hit into the strike price, and we're going to open up what's known as the option Greeks. Now, in the option Greeks, you can see here, this is called the implied volatility. And this tells you the movement of the stock. The implied volatility here is 194%. Just as a reference, if a stock has an implied volatility or IV of between 1% and 50%, that stock is considered to be less volatile or pretty much stable. If the volatility of a stock is between 50 to 100, that is like medium volatility, and that's still tradable, especially for option traders. 1 to 50 is not very good for option traders because your premium is going to be extremely low or non-existent. Now, volatility of 100% and upwards, that starts the danger zone, and that's when you need to tread very carefully. Now we're going to go ahead and we're going to go to the next quantum leap stock that I'm adding to my portfolio, and that's going to be none other than IonQ. Okay, so here we are on IonQ, and before we jump into that, let me just show you my spreadsheet of these stocks. Okay, so this here is at the start of January where we picked up RGTI and QUBT. I did make a video about this one where I got stopped out. This one is currently still in my portfolio and I was able to double down. Now the adjustment I made was to add IonQ right here. Now this spreadsheet, we usually go over it once a month, so don't worry about understanding it right now. We will go over it. Okay, let's go back to Robinhood right now. So once again, we're going to go to trade IonQ options to the bottom, and then we're going to go ahead to sell on call. Now, IonQ, I did the exact same thing as the previous 2 quantum stocks, which was I bought this outright. Now, I'm pretty sure you guys have seen some kind of commonality here. Because this stock is extremely volatile, I prefer to buy it outright as opposed to buying a leaps option or as opposed to doing some other option strategy. I prefer to own this outright because the volatility is so high. I prefer to just not have any additional risk associated with it. So with the IonQ, once again, we're going to go to sell, we're going to go to call, and we're going to choose our strike date, January 31st, once again. We're going to be selling covered calls on this, and we're going to be going for a nice chance of profitability. And this time I'm going to go a bit higher than the regular 80%, and that's because I kind of like IonQ and I want to keep it in my portfolio for a very long time. So I will be going with the strike price of $49.50. Now, with the 49.5 strike price right here, the chance of profitability is about 86%, which is super high, higher than the previous two quantum stocks that I have. And the returns on this is going to be 0.76 or $76. So once again, I do have 200 shares, so I'm allowed to do two contracts. So on a weekly basis with IonQ, I would be able to accumulate around $150 on a regular basis. Now, with IonQ and the previous two quantum stocks I showed you my portfolio, I'm doing the covered call option strategy. The other reason why I'm doing the covered call option strategy is because these stocks are so volatile. At any point in time, they could break this strike price here and go upwards. What that's going to do is that's going to force me to sell my shares in order to close out this option contract. Now, the reason why I decided to buy it outright and do covered calls is because this is a win-win option strategy for me. If the share price does go to above 49.5 from expiration date of January 31st, well then I lose my 200 shares. However, I do get to keep my $150 premium, and I also get to keep the stock appreciation. Now the stock appreciation is going to be the difference between $49 and $40 right here, which is going to be $9. You're going to take the $9 multiplied by 2 because I have two contracts. That's going to be 18, and then you're going to multiply that 18 by $100. Each option contract is 100 shares. So my gain is going to be around $1,800 if I do get assigned. Now, that is if everything else stays constant. When deciding your amount of gain, not only the stock appreciation goes into deciding that, the Greeks also play a major role. Now, we just touched on the Greeks very briefly and showed the implied volatility, but your delta, your gamma, and your theta also plays a very key role in determining your overall net gain. But that's pretty much the breakdown. If the stock goes to my strike price for the covered call, I'll be making a difference between this and this in addition to my share price. With all the quantum stocks in my portfolio, because of the nature of the stocks and its extremely high implied volatility, I decided to buy the stocks outright. Once I had it outright in my portfolio, I then decided to do weekly covered calls. Once again, the reason I do weeklies is because the stock's volatility is so high. So with the stock's volatility being so high and me doing weekly options, I'm now able to grow my portfolio almost consistently and most importantly, safely by making between $50 and $100 per trade per contract on my options. Now, this is the next quantum leap stock I'm adding. Let me know in the comments below. Do you have any quantum stocks in your portfolio? Thanks for watching. Like the video, subscribe to the channel. And until the next video, keep pushing your investments.